Project Ready TV. I am
I am
super
a
excited
black
to see you
woman.
today. I am
The
also
music
excited for you
of
to
my
meet our
soul.
guest. But
Some
before we
sweet
introduce
arpeggio
him,
of
April
tears
has become
is written
just
in a
a
minor
month
key, and
of
I can be
a lot of
heard
celebrations.
humming
Earlier
in the
in
night.
the month, we've
Can be
celebrated
heard
National Fair
humming in the
Housing.
night.
We celebrated
I
National Month of Hope. And today we are celebrating National Financial Literacy Month. So, this is a part of Project Ready where we definitely want to focus on with you guys, your families, talking about the importance of financial literacy. What does money really mean? How do we use it? How do we save it? How do we budget it? So, we're going to talk about a lot of great things today. And I am super excited to introduce our guest. He is not only great in what he is currently doing, but he is a part of our Urban League Board of Directors, the very first guest on Project Ready TV. And so I am super excited to introduce to you Mr. Calvin Calhoun from Truist Bank. Welcome, Mr. Calhoun. How are you today?
I'm fantastic. I'm doing well. Thank you.
Good, good. So before we hop into our questions today, tell us a little bit about yourself. Whatever you feel led to tell us, let us know who you are.
Yeah, so Calvin Calhoun, as you mentioned, I'm with Truist Bank, and so I lead our SBA sales effort across our 15 northern regions, and I kind of break that down to say, SBA lending is a form of commercial lending. So we work with companies with annual revenues. Gosh, it can be as high as 30 million. It can be as low as 100,000. But we work to put capital, to lend money to these businesses that may otherwise not be in a position to get those loans, or will need some extended terms, maybe be in a position to put less money down. And so that's something that we do across our bank, across all of our regions. And I just lead that for half of the bank. But it's rewarding work, working with early stage companies, businesses that are looking to grow. But more importantly, and why the SBA truly exists, is to ensure that job creation continues to happen in every community. When we loan these businesses money, people need to be getting hired. That's how that works. And so that's what I do professionally. Gosh, I've been in commercial banking about 19 years now. Been here in the upstate for the past 10. Started with the bank in Nashville, Tennessee. Was there for a few years. Was in Charlotte for a few years. Grew up in Chattanooga, Tennessee. So my whole life has been in the South. Went to college at the University of Virginia. And if we talk about personal stuff, what do I love to do? Some people know I love to travel. I love to see this world. I love to show who we are. You think about this last year with everything that's going on in this country. Black voices finding that opportunity to really speak up. And I heard a brother say something that I never was able to articulate myself. But he said, I'm Black in America, but I'm American in other places. And it's like, wow.
That's strong.
Wow. That's why I enjoy traveling, because I get to be an American fully. But back here, we still got some work to do. So that's a quick synopsis of me.
Well, that was an awesome introduction. I didn't know some of those things, so I am excited to learn more about you as well as our audience today. And speaking of our audience, we are speaking to our middle and high school students today, along with their families. Before we get started, go into this conversation even further, please do me a favor and like this, share this post, and comment. So if you have any comments, we'll be sure to get back with you. The Urban League, or with the help of Mr. Calvin, answering any of those questions that we can do for you or answer for you. So let's just hop right in. So Calvin, this is National Financial Literacy Month. Tell us, what does that really mean?
It means a lot, but to give the true definition of National Financial Literacy Month, It was put up by the Jumpstart Coalition. They're the original promoter of April being the month to really focus in on financial literacy. And it's evolved, from youth literacy, Youth Financial Literacy Day, which is introduced by the National Endowment for Financial Education more than 20 years ago, and as an activity of its high school financial planning program. And it's evolved to a full month where we celebrate financial literacy. And it's a opportunity just to learn about all things financial. So money is a part of that for sure. But it's just, there's so many resources out there in terms of books and articles and videos, YouTube videos, etc., that can help teach us about financial literacy. And this is the month where we focus on it. And as a banker, I'll tell you, our bank, this is a big month for volunteering. Bankers, we love to get out there, talk about all things financial literacy, depending on our audience, and just try to educate as best as we can.
Awesome. That's great. So Project Ready overall, we try to ensure our students, to our students and our parents, that they are prepared for college, work, and life. And every April, we take this time to just focus on financial literacy, the different various financial sectors that it brings. From your point of view, from your perspective, how important is financial literacy to a middle school and a high school student?
I think it's very important. Knowledge is power. And it's one of those things, I'll tell you, as a teenager, I learned nothing about financial literacy. So here I am many years later, and I'm very confident. But when I'll tell, all the teens here, when you think about wealth, finances, you also got to think about health. If money can be a creator of stress, and that stress can impact everything within the household, everything within you as an individual. So when we talk about why it's important because it's something that we got to understand really for the rest of our lives in adulthood. So being able to learn about it as a teenager, I worked as a teenager and made money, and all I did was spend it. I didn't apply it any other way, didn't do a good job of saving money or anything like that. And so when I get the opportunity to talk to teenagers, I love to talk about the importance of budgeting, talk about the importance of really identifying needs versus wants, and really just being intentional about what you do with money once you get it, because that's always the key.
Right. So this we talked about earlier before we hopped on how we're celebrating a lot of things. Well, it is prom season, and so a lot of juniors and seniors are getting ready for, these prom celebrations and all of that good stuff. So let's kind of tie this in, financial literacy in the prom season, kind of tie in some tips on maybe encouraging our students or giving them some tips is where they won't really break the bank because of this one day. And I can really go into some other scenarios that could break the bank because of one day celebrations. But let's talk a little bit about, prom season and how maybe we can guide them in some good tips.
Yeah, when I think about prom season, you're right. It's a bunch of outlays. I mean, if you're buying a dress or if you're buying a tuxedo or renting a tuxedo, it costs money. If it's a big party or if you're renting a limo, again, you're putting out money. And to your point, Angie, it's one day. And it's a day to celebrate. Don't get me wrong. I mean, I remember my prom, but it also, to your point, it's not something you want to break the bank on. It's beautiful in the moment, but there's nothing that you're going to take from the prom throughout the rest of your life. And so when you think about how to kind of tie financial literacy into something like prom, I'm a big proponent, again, just kind of going back to budgeting. How much do you have to spend, and how you get to that number is going to be very unique to you.
Right.
But once you get to that number, now when it's time to go get that tux, or if it's time to go get that dress and the boutonnieres and all those other things, you're staying under that. Same thing with your celebration. Same thing if you're going to rent a limo or a car or something. You're staying under that number that you budgeted, just so when it's over, trust me, you don't want to have remorse. You don't want to feel like, man, I spent so much money. What am I going to do? You set that early,
right,
and you stay with it. And whatever number you set is a number where you effectively are able to say, I can do without this after this is done. I'm okay letting it go.
Yeah, that's good. And then I think too, these kids are getting smarter too, because if I would have thought about it, I would have done some of the things that they're doing now. And that's, doing things as a group. Yes. So the more people that you have, you definitely can stay under your budget, or, not exceed those expectations before, including others into your budget. And now we have Uber and Lyft and all that. So that's a consideration, Yes. And they have where you can get luxury cars or whatever. So you have options. And I'm so excited that you reminded them to think of your options and think of, the day and then the day after. So buyer's remorse is real.
Yes. Yes.
So, it definitely is. Okay, so because it's financial literacy, I wanted to throw out a few terms to you, and you just give us, just a brief summary of what these really mean, and how we can apply it or not apply it, or however you want to answer it. We're good with that. So the first term is bank accounts.
Bank accounts. Yes. So, bank accounts, I guess the easiest way to describe their importance is it's an opportunity to store your money in a place that keeps your money protected. That's the easiest way to look at it. I got family members that kept money under the mattress or in the jar in the back of the closet, hidden away so no one would take it. But the problem is it can be taken. Or if your house catches fire, cash is gone, and you can't insure cash. I think we're going to talk insurance later. Once cash goes, it goes. So a bank account at least protects your money, in the sense that, even if the bank so happened to go out of business, you'll still be able to get your money back up to $100,000. Also, when it's time to pay folks, I always say I want a paper trail. A lot of times cash doesn't come with a paper trail. So being able to send a check or use your debit card or whatever to make a purchase, you have a receipt, you have a register of that transaction happening. And again, it's something that you can refer back to, because you never want to end up in a situation where someone says, you didn't pay me. And you say, yes, I did. And they say, no, you didn't. Well, you have a bank account, you can go and produce that statement and say, I paid you, and keep moving.
That's good.
But it's all, and there's other types of bank accounts too. So savings accounts, you can save money with those, allow your money to earn a little bit of interest, earn some money. They call it putting your money to work. That's an option as well. So bank accounts serve a lot of different functions. And think about online banking today. Think about, you can do everything on your phone now. So, I sent money to my sister yesterday for something for my niece, just boom, click of a button, she gets it. And of course we know all the different little apps like Cash App and all of that stuff, Venmo, those are out there too. But, there's some that are attached to bank accounts too, where you can also send your money and have a record of it, like we talked about, and be able to refer back to it if you need to.
Great. That's good information. What about credit?
Credit is the best way to look at credit is, from a banker's perspective, right? So we look at the 5 C's of credit. The number one C of credit, the most important C is character. And what you're effectively looking at with credit is, what is the financial integrity of this person that is looking to borrow money from me? Now, I'll pause and say, look, this isn't challenging the integrity of us in general. There's a lot of great people who don't have strong credit, and there's things that can lead to that. But when I think about credit and just how important it is, it's that one thing that can help you either get loans for whatever reason. Think about buying a house, think about buying a car, think about getting an apartment. They usually check your credit. Thinking about getting utilities in your home, they generally check your credit. So if you want to sign up, the gas and electricity, you have to have credit generally to make that happen, or they want you to put up cash and they'll hold your money for a while. So credit's just it's kind of how you performed in your contract in life. Mm-hmm. It's something that you always want to protect. There's what do they call it? Identity protection to ensure that your credit can be protected. There's credit repair services. I mean, that's how important it is, and effectively every time you make a payment on something, typically the creditors or whomever it is, the banks, they'll report that to the credit agencies. But the biggest key is when you don't pay something, or when you're late, they also report that to the credit agencies, and that's where you get hurt. And when your credit gets hurt, it can kind of limit what you can do, whether that's going to increase your borrowing costs or whether it gets you decline and you can't, borrow the money that you need at all, which we never want to be in that situation.
So what about taxes?
Taxes. Tax, what they say is two things in life that are guaranteed: death and taxes. And taxes are a necessary evil. So if you think about just local government, if you think about state government, if you think about the federal government, they are run like businesses. They have budgets every year that have to be approved, that has to be presented, and the inflows for the budget, the revenue for the budget are taxes. So, you think about if you register your car, to register that tag every year, you pay something. That's a tax. And that money goes to our county. If you think about if you own a home, you pay property taxes every single year. Those are used, again, by our county. A lot of property taxes pay for schools. So you think about, how do schools, get updated? How do they, get into a position to hire more teachers, et cetera, pay teachers more money, whatever the case may be. Generally, taxes play a role there. Same thing with the state. We pay state tax income here in South Carolina. And a lot of things are funded through the state, including the Urban League of the Upstate. So taxes play a major role in all of our lives. And then, of course, the federal government, we pay taxes there. But if you think about things like Medicare, you think about things like Social Security, where we're able to help defray the costs and take care of our older citizens who also paid their taxes while they were working. Right. This is how you're able to do it. So you need taxes in a broader society just to pay for all the various services that we utilize and enjoy every day. So in that regard, they are a necessary evil, but most people try to minimize their taxes as best as they can. But at the end of the day, we all have an obligation.
Those are good answers. Okay, what about investments? Oh, no. Let me go back. Insurance. Let's talk about insurance first. Mm-hmm.
Yeah, so insurance is when I think about insurance, it is protecting things that have value, number one, but also it's a way to help, I think we call it defray costs, if something were to happen. So if you think about it from a health insurance standpoint, having health insurance helps to minimize our out-of-pocket costs when we have a procedure or when we go to the doctor or go to the dentist, whatever the case may be. You think about car insurance. Generally, you can't register your car without insurance. Why is that? Well, if I go out and get into an accident and I hit another car, who's going to pay for their damage? Do I want to pay for it out of my pocket, or would I like for my insurance company to step in and pay 90% of those costs? That can help you. Just some protection. We insure our homes. We generally insure most things with a lot of value. So again, if something were to happen to your home, then insurance could be there to rebuild. It can be there to just pay out some of the costs necessary to bring that asset back. And if you think about getting an apartment, renter's insurance, same thing. If someone were to break into your home, or say there was flooding, due to a water main breaking or something like that, and you had some damage and you wanted to replace some items that got damaged, insurance can help with that. And then probably one of the bigger pieces of insurance, which we all know about, or speaking to teenagers, you may not know about it, is life insurance. That's another one where it's what you do in an effort to try to protect your loved ones that are here after you're gone. So if I die prematurely, then my insurance company, my life insurance company, will pay out to whoever I designate as a beneficiary, whether that's a child, whether that's a spouse, whether that's my parents, whatever the case may be, whether that's an organization like the Urban League of the Upstate. Some people do that, where they like to get insurance policies out on themselves so that when they die, that funds can go to an organization that they want to support. So there's a lot of different uses for insurance. If you buy a motorcycle, you have to insure it. If you buy a boat, you have to insure it. Sometimes jewelry, especially expensive jewelry, you tend to want to insure that in case it gets lost or damaged. You can get it replaced. So insurance is just, it's a way to protect your money in a sense. So, I've heard people say, I don't like paying premiums. I don't like sending money that I'll never use, but it's always there just in case. Just the worst happens. And that's the beauty of insurance. You don't want anything bad to happen, but if it does, you're prepared for it.
That's good. Okay, now investments. And then after investments, we have one more.
Yeah, so investments, that's the idea of making your money work for you. There's a lot of different forms of investment. I think in the last 12 months, investing in stocks and the stock market has become huge. A lot of people have been at home. They've been, just kind of been, not able to travel or spend their money going to the movies, not being able to do just some of the normal things that we do when life is just wide open. So a lot of people have gotten into investing, which is basically an opportunity to take your money and buy shares in a company or in a fund, and you hold those shares over time, and those companies can grow. Those shares can become more valuable, and then eventually you want to get to a point where you can sell the investments that you bought. Another form of investing that you see a lot is real estate. I have a friend right now whose house is for sale. And, it's interesting. This is a seller's market, by the way. But if you buy a house for, $100,000 and you hold it for a few years and the neighborhood grows and things around your neighborhood, they start to build up and they're putting new restaurants and they fix the roads, and maybe they've put some other homes around you, or the school district has kind of come up a little bit. What ends up happening is that property appreciates. The value of your home rises without you doing anything. You just live in it, and what happens is when it's time to sell, you may have bought it for $100,000, but now you can sell it for $200,000. And then when you get that extra, you pay off your mortgage and you get that extra money, you've generated money through appreciation. That's an investment, technically. And a lot of people invest in real estate outside of their primary home. They like to do real estate investment, buying duplexes, apartments, things of that sort. A lot of different ways to do that. Other forms of investment, especially talking to this population, because I know, sometimes in your teen, you may collect things. So some of y'all may collect shoes and have these really nice shoe collections and stuff. And that's big business. There are a lot of people that collect shoes. but they never wear them. It's just, I want to keep them pristine. I want to keep them clean. So when the point comes when I want to sell my collection, say you paid $100 for 30 pair of shoes, that's $3,000. But then someone comes along and says, I'll buy all of your shoes for $10,000. All right, I just made $7,000. Same thing with, baseball cards. That's what we collected when I was a kid. Comic books, some people collected those when I was younger as well. Those can maintain a lot of value.
Barbie dolls.
Yes. Oh, yes. Different the dolls, record collections. There's a lot of things. Artwork. Generally, a lot of art collectors out there. You buy a piece of art today and you sell it 20 years from now. If that artist blows up, who knows what you could sell that one painting for. So investments, there's so many ways to invest. It's just wrapping our heads around how to do it, how to get into it, the pitfalls. Because one thing about investment is if you can gain money, you can lose money. So you have to weigh that risk and be careful and do that research. But I tell people, don't run away from investing. It is an opportunity for your money to work for you. And if your money can grow without you having to do anything extra, figure out a way to make that happen. But just be careful, trust a professional.
Awesome. Well, we're going to have to invite you back to talk a little bit more about scholarships and grants and all that good stuff. But before we go, I just want you to give any words of encouragement to our students, our parents, anybody that's viewing. Let's just try to wrap all this good information in. And what are your final thoughts about financial literacy?
My final thoughts are just consume information. I'm thinking of different books that I read over the years. As I said earlier, I didn't know anything about financial literacy as a teenager. But I started learning in college and after college. And what you start to do when you start to learn about it is you start to recognize financial conversations when they're happening. And that can also kind of pull you in. It can expand your friend pool. I have a guy that I went to high school with, went to college with, and we've invested in real estate together just because we've had that relationship and we've been able to talk about money and things of that sort in real estate as we've gained that knowledge over the years. And so what I'll say to everybody is just educate yourself, seek out help. It's okay. Trust me, everybody started from nowhere that has, that considers themselves to be financially literate. I work at a bank and, we introduced a program a few years ago that was really geared towards helping our teammates go from a place of financial meagerness to a place of financial confidence. We talked about the health benefits of being financially confident and not having that stress in your life. And even with a bunch of bankers, a lot of folks had a lot to learn. So we don't talk money. You're not taught about money in school. It's not a part of history, or whatever class you're taking. And so it's okay if you don't have that knowledge now. But there's so many different, resources out there. I'm trying to think of different books. Rich Dad, Poor Dad was a good book I read many years ago. I think I have it back here. Napoleon Hill's Think and Grow Rich. That was another good book to read. Just to talk about all these different concepts that you just mentioned, Angie, the bank accounts, credit, taxes, how they work, how they impact you. All those things are in there. And it just gives you an opportunity to be educated and be able to make informed decisions as you push through life. So even with the parents, I say to just keep seeking out info and keep looking for ways to grow your money. But at the same time, find yourself a budget, find yourself something to stick to. And this is for all the teams as well. And just be really, really intentional about paying yourself first. And when I say pay yourself first, when you get paid, put money to the side for savings, for a rainy day. It's very important to always have that rainy day fund. Remember, we talked about insurance. Insurance will protect your big items, but a rainy day fund is that fund that you tap into if you run into a challenge and you just need access to cash immediately. And the only way to get that is to just be very consistent, putting that money to the side. Every time you get paid, pay yourself first, then you pay your bills, etc.
Awesome. Well, this has been a wealth of information today. Again, thank you for being the first board of directors guest with us on Project Ready TV today. And thank you for all that you do for the Urban League. I don't think we as staff get a chance to say thank you, but we appreciate all of the hard work that you guys are doing on the behalf of the Urban League and the staff and our community. So with that, I hope that you have enjoyed our segment. I hope that you would share this with someone, tag this with someone so they can begin to understand what it means to be financial literate. And it's such a great term. I like that word, financial confident. I love it. And I think I'm going to start using it because I need to become that myself. So just two announcements before we sign off. Don't forget we have ACT prep signups going on. And then don't forget to join us in person or virtually April the 27th, which is next Tuesday. Our guests are Bold Leadership. There are a bunch of African-American principals, educators that's going to come together along with the Urban League and talk about the importance of mental health in the Black community. You can go on eventbrite.com to sign up for that. And again, we have both virtual tickets and in-person tickets. Thank you again, Mr. Calvin Calhoun, for being our guest. And until next time, everybody, I'll see you then. Goodbye.
Thank you.